Question: are you ready to make meaningful change to your financial health, but you have no idea where you stand? Well, in this video, I'm going to talk a little bit about net worth, why it matters, and how you can track yours. By the end of the video, you'll have a very clear picture of where you stand financially and get a good sense for where you can go next. Welcome to Refactor Your Money. I'm Max, an accredited financial counselor, here to help you break free from financial stress and start living the life you deserve. So, what is net worth? Well, simply put, it's a number. It's your assets minus your liabilities, or in other words, what you own minus what you owe. It's also a data point. It's a point in time data point that just gives you a baseline idea of where you stand financially. Why should I even calculate one? You might be asking yourself. And if you're anything like me, I ask myself that same question. There are three main reasons why I think it's important to calculate your net worth. Reason number one to calculate your net worth is simply to generate a data point about your financial health. Now, I like to equate this to stepping on the scale when getting serious about your health or trying to improve your fitness. Just like that, net worth gives you a number that serves as a data point in time that can be taken over and over and over in progressive steps at progressive points and start giving you a trend line for the way your financial situation is improving or declining. So just like stepping on a scale, you might step on a scale, you'll see a number, gives you an idea of where you're starting, and it's just a fantastic jumping off point to figure out where you want to go next. And just like if you ever took a statistic class, like I took statistics in high school, we learned that it's pretty important to have at least 3 data points before you start trying to analyze any sort of trend. The same applies here, right? Knowing how to calculate your net worth allows you to create data points over time that start to tell a story about your financial health and your financial trajectory. Number 2 is that it opens up the door for more granular and holistic financial analysis. Just like with a scale, once again, with physical health, you've got your number from the scale, but once you have that, you can start pairing that with other numbers like your height to start calculating your BMI, your body mass index, right? So you might know how much you weigh, you might know how tall you are, but that only tells you so much. It helps to take those numbers and start evaluating your health on a different scale, body mass index. The same applies for your financial health. You might know your net worth, and that's great, but that only tells part of the story. It also helps to then dive off that number and go one level deeper into things like asset to debt ratio or solvency ratio that start to give you other perspectives on your financial health that go even deeper than your net worth. And the third and final reason why it's so important to calculate your own net worth is that it's going to bring something up for you emotionally, right? Again, the same analogy to health, physical health comes up here. When you step on the scale, you're going to look down, you're going to see a number, and you're going to feel something, right? Hopefully it's something positive. Hopefully you feel like, hey, this is great. I weigh less or more than I thought I would. I have more muscle than I thought, or I've lost more fat than I thought, or whatever it might be, right? It's going to be the same with your net worth. You're going to run through the calculation, you're going to go through the exercise, you're going to see a number, and it's going to confront you. And you are going to have to sit with that feeling, right? Hopefully it's something positive. Hopefully you're pleasantly surprised by how high the number is. More than likely, you may feel disappointed. You may feel, hopefully not, but you might feel shame. You might feel despair. Oh my gosh, it's negative, or why is it lower than I thought it was going to be? That kind of stuff is just important to know. It's important to feel that, and it's important to start processing it, right? Personal finance is totally personal. Everyone has their own emotional relationship with money, and having your net worth right there staring you in the face really just starts the process of working through that stuff, understanding how you feel about your finances, and really getting to the root of why and how you want to make changes. Now, you may be asking yourself, great, now you've convinced me, right? I know what a net worth statement is, and I know why I should do it, and I know high level how to do it, but how should I actually do it? What's the actual effective way to do it? Well, I'm going to jump into a screen share here and show you a spreadsheet that I created. And I actually used this for my own financial journey myself 7 years ago when I started getting serious about my own financial trajectory. I'm going to walk you through how it works. So let's jump in. Okay, here we are in the personal financial tracking template spreadsheet that I have created. If you want to use it, it's available down below in the video description. So feel free to grab it if you want. You can use it as a template for yourself. Again, this is just dummy data that I've put in here, but I'll walk you through how this works to calculate your net worth. We're going to be here on this net worth tab. There's also a cash flow tab and a chart data tab, which I'm going to skip those for now. I'll do another video another time that goes through this entire template, how this entire spreadsheet works. But for now, we're just going to stick with net worth. So the way this works, I mentioned in the previous segment that there's basically two parts to this. There's the assets and liabilities. We start with assets at the top. That's everything you own. And I've broken it down into sections. So there's a cash section. Within the cash, there are subsections. So checking account, savings account, certificates of deposit, and other. So again, I just put some dummy values in here and just some dummy data, dummy banks, just to get the sense for how it works. I've also broken it 1 through 12. If I scroll to the right, you'll see that there are actually 12 here. This is for 12 months. And I didn't name them because I wanted you to be able to, if you download it and use it, I want you to be able to start right away. If it happens to be April, I don't want you to feel like you have to start at 4, right, and go forward. You can just start at 1, do all the way from April all the way through the following March, and then just use it as a trailing 12 month, right? You don't have to start it in January necessarily. So month 1, whatever month that happens to be, go through all your assets, check their values, and list them out here. If you need to add more, you can. If you need to create more rows, you can create more rows yourself pretty easily. But you tally all that up, and you'll see there's a total cash subtotal here of 43,200 for month 1. Month 2, 44,471. Now, you don't have to do this monthly. In fact, some people don't like to do it monthly. Some people like to do it every quarter or every year, just so that there's ample time to actually start seeing changes. But I have it here monthly. That's the way I did it. I'm kind of a data nerd. I like to see my data very quickly and get a tight feedback loop. So that's how I did it. Do it however you want. Then there's another subsection here for retirement. So that'll be tax deferred. That's anything like an IRA or 401k. It could also be a TSP or a 403b. There's other types, obviously. Tax exempt would be any of those things that are Roth versions of those, where you've paid the taxes before you put the money in. And then pensions or deferred compensation, that would be, there's a subsection there for that. If you happen to have a pension that has a cash value currently, you put that in here, right? So you put all those values in, you're left with another subtotal. So you've got now 2 subtotals, cash and retirement. Same thing here for investments. You might have life insurance. There might be a whole life insurance policy you might own that has a cash value. You could put that in here. If you have a brokerage account that you've set up, put that value, obviously. Real estate investments, if you happen to have any rental properties, you can add those. Same with treasury bills or notes. You might have some bonds, US Treasury bonds, etc. Bills or notes can go here. And then anything else you might have, like individual stock certificates or whatever other types of investments, gold could go here, that type of thing. Stick that down here. And actually, I take it back on gold. I forgot that I put another section for other property down here and personal property. You can put your gold down there. It probably makes more sense down there. So again, now here we are on personal property. So that could be your primary residence, right? Your real estate that's just personal to you. Vehicles, if you own a car or 2 or 3, whatever, you fill them in here. And then other property. So I mentioned gold. Again, art, jewelry, anything else you own that could be of value to someone else, someone you could sell and get money for that. Put that in here. You'll have subtotals for each of these subcategories. And then down here is a breakdown of your total assets. So 627,025. That's for all those 4 subcategories or those 4 subtotals totaled up. And then I actually broke it down even further. There's a line here for total liquid versus total illiquid. Now what that means is liquid is something that's very easily convertible into cash. So checking account, a savings account, actual physical cash, that's all very liquid, right? Illiquid would be something like real estate or a car, things that take some time to sell and have costs associated with selling them, right? Those are illiquid assets. You still own them, they still have value, but you cannot access that value quickly, so it's considered illiquid. So I broke that down just for the sake of knowing it. There's other ways you can analyze that. I can go into that in future videos. But that leaves you with your total assets. Then you move down into your liabilities. Similar thing going on here, right? You've got your subsections. This one is less granular, but broken down into credit cards or any other revolving loans you might have. Again, some dummy data here. Just check your current balance, right? You could go by statement balance if you'd rather do it that way. Put all those balances down here. Same for any student loans you might have. Put that balance here. Any mortgage balance you have. Same for investment real estate. If your investment real estate has a mortgage balance, you want to put that on here. Then any other loans you might have. You might take out a loan on your 401k, or you might have a loan on your life insurance. And then other liabilities might be like a personal loan. Maybe you have a loan from family or something like that, and that has some sort of balance on it, of course.
So you will put that down here as well. And then that will leave you with a total for your liabilities. And then at the bottom, you are left with your total net worth, right? So this number here is simply just the assets, the subtotal of assets up above 627, and then subtracting out 339, that leaves us with 287, right? So pretty basic calculation. And then you can see the same thing here for month 2. I changed the numbers up a little bit here just to represent net worth going up. So this is someone whose liabilities are going down and their assets are going up. Now, the assets going up could be obviously investments gaining value, homes gaining value, saving cash, right? Those are all ways your assets can go up. Liabilities would go down obviously by paying off loans. You pay off your credit cards, pay off your mortgage, maybe paying off your personal loan. Those balances go down, liabilities go down, and that creates a delta, which will increase your net worth, right? So this person, this theoretical, hypothetical person's net worth went up 287 to 296. That's pretty good. So that's just under 10 grand for the month. That's solid progress. And then in the spreadsheet, I also created a couple of nifty little tracking tools here. So I mentioned in the previous segment of this video that the net worth number is a jumping off point for more granular numbers that can give you a better sort of holistic picture of your situation. A couple of those are asset to debt and solvency. There are notes here about what those are. I'll go into that in more detail in a future video, but suffice it to say that these numbers are calculated based on the net worth that you're seeing here up above, and there are graphs for those as well. So as you enter numbers in here, you will see those change. So if I were to just copy over all these values, if I were to like copy these over, let's see if I can do this quickly. See how quickly I can do this. Copy this over, copy all of these over. We're just going to go with the exact same numbers just so you can see these charts change. I'm not going to get fancy and try to make the net worth change in any way. So let's just copy those, paste those over here. So the net worth is exactly the same now in month 3 as it was in month 2. And you'll see that these charts now have a third column, right? So the net worth here went up from month 1 to month 2. This is net worth over time. It stayed the same from 2 to 3, but you can see that there's also a trend line here. So while it has stayed the same from 2 to 3, the overall trend line for all 3 data points is up and to the right. So that's what you want to see. Obviously, if you're net worth, you want to see that number going up. You want your assets to grow, your liabilities to shrink, and that will result in net worth going up. Net worth ratios over time. So these are those ratios that I mentioned up above. You'll see that there should be a number populating here now. Yep. Asset to debt ratio is exactly the same as solvency, because obviously the assets and liabilities are exactly the same. And you can see that plotted here. So it goes up and then the same, and then up and the same, and the trend line follows you all the way across based on those 3 different data points. So that's how you can plot this in a spreadsheet. If you want to do it that way, there's obviously other ways to do it. You could just do it on pen and paper if you want, or there's software that can do it for you. But I just wanted to show you this. Again, this is downloadable. If you want to click the link down below in the description to download this exact template. It does not have the dummy values in it. You can just plug in your own numbers there, and it'll give you your own net worth value. And you can use that as your own jumping off point to start figuring out your next steps as well and calculate all your ratios. So hopefully that's helpful. I'm gonna drop us off there and go back to the main video.
So there you have it. I hope this video has been helpful. And before I let you go, I want to highlight just 3 things real quick. First, the spreadsheet that I just showed you is available down below in the description. If you'd like to get a copy of it, just click the link, fill out the form, and I will send you a template you can copy in Google Sheets, and you'll be off and running. And then secondly is there's another link down in the description for my 30-day money refactor guide, which is basically just a step-by-step guide you go through for over the course of 1 month. It's got some great stuff in there, some great actionable steps you can start taking to start your own money refactor, start making some changes in your own financial journey. It gives you some clarity, gives you some idea of where to go next, where you stand, similar to net worth. And it's really great. So again, it's totally free. Links down in the description. And then lastly, if you're interested in a little bit more one-on-one sort of curated advice that's specific to your personal situation, I have a scheduling link also down below in the description where you can click that and set up a time on my calendar to go through your own, just sort of like a 50-minute focused coaching session for your own needs. So if you're interested, please go ahead and do that. And then lastly is just if you're interested, if this content was helpful to you, you found it useful, and you think any of my future videos might help you, feel free to like and subscribe so you can be in touch with all my future releases, which I'm trying to do one a week. And if you have any thoughts about ways I can help you or make this more useful to you, future videos that would be helpful to you, please comment down below and let me know what you're facing, what you want me to answer, and I'm happy to dive into that stuff for you. So anyway, that's all for now, and I will talk to you in the next video.